So welcome everybody to today's AGP webinar. I'm Lisa from the AGP office, administrator, tea, coffee, whatever you would like. I'll be here helping to facilitate the session today alongside Matthew Jones, who is our expert delivering the webinar. I'll pass you over to Matthew shortly, but just before we do, just a couple of housekeeping rules. Can you just for the time being ensure your microphone is muted, please, to avoid any interference or background noise. There will be a question and answer session later in the webinar. Obviously, then you can switch your microphones back on to ask, or if you prefer, you can ask any questions on the chat facility, and Matthew will try to answer as many of these as possible. If you need any support during the webinar, I'll be monitoring the chat, so if you have any problems, just please pop a question in there for me. We are being recorded this morning just to help us collate any questions or comments which may be missed during the live webinar. If anyone has any questions or concerns about this, please let us know. Following on from the webinar, I'll be sending out 2 emails. We do need a digital signature from you for the Welsh Government, which will come through in an AG3. This will come through via HelloSign with a link, easy to follow and takes less than a minute. It is important that we get those signatures back because it just allows us to confirm to the Welsh Government that firstly the webinar took place and how many people attended. So please get those back to us as soon as possible. You'll also receive an email with a link to 2 surveys to provide any feedback to us. So please could you complete these? And that's it. So I'll hand you back over now to Matthew to carry on with the presentation. Thanks, Matthew.
No worries. Hi everyone, hope you're well. I thought I'll kick off with a little bit of background about myself, just so you know my experience in this area. So I'm actually the founder and managing director at a company called Limestone Grey. We're based in Cardiff, and we are a chartered R&D tax credit consultancy. So that's all we actually do. We don't do anything other than R&D tax credits. I myself am a dual qualified accountant and chartered tax advisor. And obviously I specialise solely in the R&D tax credits, and I've successfully recovered millions of pounds for companies in Wales and beyond. Got experience of working with both large and small companies from pretty much all sectors, and happy to say that myself and us as a company have achieved a 100% success record in every R&D tax credit claim we've ever submitted on behalf of our clients. So obviously a little bit of a legal bit. We've prepared this slides to be as detailed as possible in the time we have, but obviously there's no substitute from getting professional advice. So if you do go ahead, you think you do qualify and you want to go and do an R&D tax credit claim, whether you contact us or anyone else, just make sure you get someone who's qualified in this area to make sure that they're doing the R&D tax credit claim correct for you. So I thought I'd kick off a little bit about what are R&D tax credits. I know some of you are probably already familiar with this, but some of you may not be. So I thought I'd cover off some of the basics to begin. So the first thing to note about R&D tax credits, it is a form of corporation tax relief. That means you have to be an entity that's chargeable to corporation tax, which means that if you're not an incorporated entity, you would not be able to get R&D tax credits. So if you're a sole trader or a partnership of individuals, you cannot get R&D tax credits. It's only available to limited companies. So it was created actually back in 2000, so it's been around for a very, very long time. But since then, the relief has actually continued to get much more generous. And can provide now companies with actually quite a sizable amount of money, cash back on their R&D activities. So just to give you a little idea of what we're talking about here. So a qualifying company can actually get back up to 33 pence for every £1 they spent on R&D. So that's obviously a third. It's a really high rate of relief. And to put it in context, according to the latest statistics, which covers 17-18, that's the latest ones we've got, the average value of an R&D tax credit claim for an SME company is £54,000, and obviously a large company is £316,000. So we're talking about quite a lot of money here. So a little bit about where we are in Wales with this. So per the latest stats, there's actually over 21,500 R&D tax credit claims done in the year. That covered £525 million of expenditure on R&D, which essentially equated to £95 million back to Welsh businesses in 2017-18. And as suspected, the majority of claims in Wales are submitted by SME companies. So a little bit of update on where HMRC are with R&D tax credits and with obviously the current COVID-19 situation. R&D tax credits, HMRC are still processing them. There's been no impact at the moment in terms of timings to get these R&D tax credit claims done. So upon submission of the claim, they're still hitting their 28-day target. And in fact, we submitted a claim for a company about 2 or 3 weeks ago, and they had their money within 7 days. So actually we're seeing in some instances claims being accelerated because companies obviously are in a position at the moment of needing some extra cash. So the average time to do an R&D tax credit claim essentially is roughly 4 weeks, but you know it depends on your ability to supply information on how long that takes, and it's possible to get these done in 5 to 7 days. So that means if you did want to start an R&D tax credit claim today, you could literally be looking at receiving the money within 35 days, which is quite a good turnaround. And obviously, successful claims are still being prepared using digital forms of communication such as Zoom or Microsoft Teams. So let's stuck into a bit of the detail about R&D tax credits, and probably what everyone wants to know is who can claim this, who can claim R&D tax credits. So the relief itself is available to limited companies of all sizes and in all sectors. So it doesn't matter what size you are, there's no minimum size of company that can make an R&D tax credit claim. All companies can make a claim, obviously provided they can demonstrate that they're working on qualifying projects, and which I'll go into detail shortly. But successful claims have been made in sectors that tend to be overlooked. People don't obviously necessarily spot R&D in these sectors, but these are ones that are making successful R&D tax credit claims, including construction, mining, agriculture, transport, and even financial areas. It's important, I think, to note that innovation happens in every business. And the thing is, the people who run these businesses, who own these businesses, don't often do it as innovation because they see it as what they do every day, day in, day out. But actually, as I'll explain in a moment, that can be innovation in terms of HMRC's definition. So I'm going to touch on what's often referred to in the R&D tax credit world as the claim gap. So that's the difference between the companies that qualify for this and the companies that claim the relief. So I think there's a lot of figures banded around the industry from 90% to 80% essentially don't claim, even though they qualify. To be fair, no one really knows what that percentage actually is. But I think the consensus out there is that essentially a significant proportion of companies qualify, yet only a tiny percentage of those actually take it on and actually submit an R&D tax credit claim. And there's a couple of reasons why. One being awareness. I think this isn't such a big deal these days. I think a lot of people are aware that this tax relief exists, but it's still, it doesn't surprise me if I walk into a room full of people and talk about R&D tax credits and they go, "What's that?" But the main fundamental reason why I think people are still not claiming is the perception. And that's the perception of the term research and development. Because a lot of people, when you say the term research and development, they think of big blue chip organizations spending millions, hundreds of millions on researching innovative new products, and they don't see what they do as being in the same areas or anything like what they're doing. But essentially the term research and development for tax purposes and what you might think of the term research and development are worlds apart, and I'll explain a little bit more on that in a moment. And then the third bit is understanding what's involved in submitting a claim. So there's obviously a belief out there that submitting this, you've got to document everything you've ever done. You've got to get all your invoices together, staple them up and submit them into HMRC. That's not the case. It's not as difficult as that. It's not as time consuming as you may think. It can be quite an easy exercise that can, like I said, can be done in a couple of days. So, you know, this claim gap is starting to improve. More and more companies are claiming. The stats each year show this. More and more companies are claiming R&D tax credits and actually taking advantage of this scheme. So some of the common misconceptions we hear regularly from some of the people we've been talking to. This one that most people will say is we don't do R&D. So like I touched on a moment ago, companies don't need to be involved in doing laboratory research. You don't have to have a PhD on your payroll. You don't have to have a laboratory in your organization, nothing like that. People's perception of that term R&D and its tax definition are worlds apart, and I'll explain a little bit more on that in a moment. Another one, which we hear a lot, my company is loss making, so wouldn't benefit. So again, there's a perception out there, well, if I'm not paying corporation tax, how can I benefit from a corporation tax relief? Actually, R&D tax credits can still give you money even if you've never paid £1 in corporation tax. So it almost acts as a negative corporation tax where you're taxing HMRC essentially. Another one, we've received grants, so can't claim. So we've already had some money from the government. We can't get more through R&D tax credits. That too is incorrect. It does not matter what type of grant you've had, you will always be able to make an R&D tax credit claim. The only impact a grant will have on your R&D tax credit claim is how much you can actually get from an R&D tax credit claim if you've had grants, but you definitely can still submit one. And another area we often see is our R&D wasn't successful, so we can't make an R&D tax credit claim. So that's completely wrong. If a project fails, it does not matter. You will still be able to submit an R&D tax credit claim. So a little bit now about, well, how do I identify within my business whether I can now make an R&D tax credit claim or not? So to qualify for an R&D tax credit claim, you need to be able to first demonstrate to HMRC that you're working on a project, as they term projects. And essentially what they do is give 3 different types of example here. So a project can be in one of 3 areas. So the first one is creating something new. So creating something new in your industry. So that can be in terms of a product, so something tangible you can hold in your hands. It can be in terms of a process. Now, I'm not talking about business processes here. It has to be a scientific or technological process, such as engineering, construction, manufacturing type processes. It can also be software, it can be services, or it can be a device. So creating something new in the industry, essentially saying you're breaking ground, you're pioneering with something new, is obviously where people think, well, okay, I'm doing this. This is probably where I'm going to be able to get an R&D tax credit claim. And indeed, you probably would, but that's not necessarily conclusive evidence that you would be able to make a claim. And I'll touch on the second thing you need to be able to demonstrate in a moment. But less well understood is the other 2 areas or other 2 types of project. So you don't have to be creating something new to qualify for R&D tax credits. So the second area is making appreciable improvements to something that does already exist. So it doesn't matter if it exists outside your company, but it just does exist in your industry. And what you're trying to do is essentially make an appreciable improvement on that. That as well, iterative improvements on your products, processes, services, software, devices, that too can qualify for R&D tax credits. And the third area is, it is a little bit more difficult to get, but it's still possible, is actually duplicating an existing product. So let's say you're in an industry with 10 competitors. One of them has achieved something, a breakthrough. Crucially, they haven't obviously shared how they've done that, and you're looking to do the same thing. You too can get an R&D tax credit claim, even if they were there first. that is an area that people don't spot, but that is still something that you can claim R&D tax credits on, provided you're not trying to reverse engineer and rip off what they did. You're looking to get to the same end result, but go about it in a different way. That too can qualify for R&D tax credits. So I think it's fair to say most, if not all, companies can tick this box. So most companies will be looking to develop new products and processes or improve on their existing ones to stay relevant. So you would think to yourself, okay, most companies can tick this box. Does that mean most companies can claim R&D tax credits? Unfortunately, that is not the case. Crucially, you need to be able to demonstrate a second condition on that. So it can be the case that someone's creating a brand new product in the industry that's very commercially innovative in terms of the features it offers and not to be entitled to R&D tax credits. And someone could be duplicating something that already exists within the industry, but can claim R&D tax credits. So it all boils down onto the second condition, which I'll go into in a little bit more detail shortly. So that second qualification rule, and to simplify it as much as I can, is essentially is where the most difficult part of assessing whether or not a project qualifies or not, the second qualification rule. So in order to understand what HMRC are looking at here, it's easiest to think of it in terms of HMRC not being interested in the end result of your project. So essentially, let's go back to that example of a company developing something brand new, a new tangible product that offers lots and lots of features that distinguishes it from what's available in your industry at the moment. So you might think to yourself, okay, this is great. This product is really new, pioneering. I'm entitled to R&D tax credits. Well, HMRC are not interested in that end result in terms of that product and what it can and can't do. Because what HMRC will come back and say is, well, okay, all these features on this end product that make it unique, essentially they make your product commercially innovative, but it does not necessarily mean it's scientific or technologically innovative. And that's what HMRC are interested in. So in order to work that out, they will say, okay, let's take this end result, this end product, let's park it to one side. Let's all take one giant step back and look at how we got here. So HMRC's focus is on all the work that went into the project in terms of that development process, and not so much on the outcome of that project. So they want to know that the work involved in getting there contained qualifying challenges that were difficult to overcome. Okay, so they don't want to see that the journey, that work, the R&D process was very easy to do. They want to see that it was quite difficult to do that development work. And I'll touch on that in a moment. So what do we mean by these qualifying challenges? So what you need to be able to show HMRC that you've got qualifying challenges within this project. So the first thing to note is they're nothing business related, okay? So we're not talking about challenges of, well, don't know whether we've got sufficient funding to do the development process. We don't know whether we can recruit the right staff to help with the process. We don't know whether or not our rival's going to beat us to it, or we don't know whether the product's going to sell at the end. All these are business problems that HMRC are not interested in. And you should never touch on those in terms of an R&D tax credit claim. What they want to look at is any challenges of a scientific or technological nature. That's the focus. So they're looking to see along that journey between when you started the project and when you finished, that there was challenges of scientific or technological nature that essentially were not readily deducible by a competent professional in the field. So by that, I mean, it's not something quite trivial. It's got to be a bit more fundamental challenge. And also that the challenge cannot be easily resolved by accessing publicly available information. So for example, you can't go and Google a solution. You can't go and read it in a book. You cannot talk to your peers to find the solution. You are left yourself having to scratch your head and figure out the answer yourselves. That is what HMRC are looking for. If, for argument's sake, you could Google it or read it in a book, that would be regarded as a non-qualifying challenge. And the reason being, it's only challenging to you in your company. It's not challenging to the industry. The information is already available in your industry. So by you trying to figure out the answer by Googling and reading in a book, technically you're not advancing anything. You're not advancing knowledge in your industry. So that wouldn't qualify. If it is the case that you can't find that exact answer in the public domain, there's still uncertainty about how to overcome that challenge, and you're going to carry on anyway, that's what qualifies for R&D tax credits. It's whether or not you've got a scientific or technological challenge where you are uncertain how to attack it, and you can't get the answer on Google or read it in a book. That's what you're looking for in terms of understanding whether or not you claim R&D tax credits. So a little note at the bottom, a good advisor will guide you through this process to ensure that you reach the right conclusion on here. And also, obviously, a good advisor will help you pull together the case to justify that your project does qualify to HMRC as well. So that covers a little bit about how do you know if you qualify for this relief. So you need to be able to demonstrate to HMRC that, one, you have a project, whether that's creating something new or improving something that already exists or even duplicating a rival's breakthrough. And that two, that project was technically difficult to do. So the work involved overcoming scientific or technological challenges that were not trivial, and I couldn't find the answer in the public domain. I've got to figure out myself, and there's risks associated with that work that I might get it wrong. That's the easiest way to think of an R&D tax credit claim. It's all about the journey and not the outcome. So assuming then that you've got a couple of projects that were technically challenging to do, you probably want to know, well, what can I claim for? So there is a finite set or categories of costs that you can claim R&D tax credits for. And these are basically broken down into 5 different distinct areas. So the biggest cost category that you can claim for is, or in most companies, this will be the biggest, is payroll costs, so PAYE costs, so your staff on the books. So you can include their cost in your claim or percentage thereof to reflect the time spent working on these projects. Now, within the payroll cost category, there is a second area, and that's reimbursed employee expenses. That can also be claimed. But you may notice the keyword there was reimbursed. So what I mean by that is if an employee had to go and visit, say, a subcontractor as part of the R&D process, and they use their car, and then they put in a claim for 45p a mile back to the company, and you reimburse that, then that's claimable in an R&D tax credit claim. If, on the other hand, that employee took a flight or a train somewhere, and they used the company debit card or credit card, or the company paid for that flight, then you cannot include that in an R&D tax credit claim. Now, that's a very odd rule, and it's something to watch out for. But to get an employee expense included in the claim, it must be reimbursed back to them. So they need to have paid for it first. The second category, which is noted on there as EPW, which stands for externally provided workers. So that, again, is essentially like employees, so they're workers that are under your direction, supervision, and control. However, you don't pay them via PAYE, you pay them by an invoice. So they can also be included in your claim. So kind of like an agency type relationship, agency worker type relationship. The third category is subcontracted R&D activities. So if you've had to outsource certain aspects of your R&D to a third party to do on your behalf, perhaps testing or coding, anything like that, that too can be included in your R&D tax credit claim. The fourth category, noted as consumables on here, is consumable materials. So that's the cost of raw materials that were wasted in the R&D process. It can't be materials that ended up being in any form of product that ended up being sold. You can almost think of it as the cost of materials that ended up in the bin as part of the R&D process, so in failed prototypes and stuff like that. that can go in, the cost of those materials. And the fifth and final category of expenditure is software. So if you've had to license in certain software applications to do the R&D technical package, like CAD packages or software to write that enables you to write coding, that too can be included in your R&D tax credit claim. So it's those 5 cost categories. So all your R&D expenditure must relate in these 5 categories to be claimable. Anything that sits outside of those is not claimable. That said, those 5 typically do cover the bulk, if not all, of most companies' R&D expenditure. So it is usually covers most companies' R&D expenditure. So a little bit about the R&D tax credit claim process and underclaiming. So when you speak to your advisor, make sure obviously they consider this full list of claimable costs under each category, and make sure they understand the rules for each to make sure that they're maximizing the claim value for you. Projects do tend to be underclaimed quite significantly, obviously due to unfamiliarity with what can and cannot be claimed and to what extent it can be claimed, and then dramatically reducing the tax relief benefit. So a little bit about the actual claim process itself. So an R&D tax credit claim is made up of 2 parts. There's 2 parts to it. One being the calculation. So you need to obviously be able to apply here the rules set by HMRC for all of these cost categories, and then obviously the final output determines the size of the claim. So let's say, for argument's sake, you go through those 5 costs. Those 5 costs need to be in your accounts for the year. You go through those accounts, through those 5 categories, and let's say, for argument's sake, let's keep the numbers round here and say it comes to £100,000 after all the rules have been applied correctly. Like I said earlier, R&D tax credits for an SME organisation can give you up to 33% of that back. So you're looking at then being able to get a repayment from HMRC of £33,000 based on £100,000 qualifying spend. So that's the calculation part of it, which obviously quantifies to HMRC how much money they owe you, which depends on how much money you have spent in those qualifying categories. The second part to the claim is the project report itself. So this is justifying to HMRC that you're entitled to make the claim. And to be fair, it is the most important part, because if you are unable to justify the claim, there's no point doing a calculation. So you need to understand what information HMRC want and need to be able to do this. It obviously needs to be right, because obviously getting this wrong can mean a claim being questioned or even rejected. It touches back on what we covered really in terms of knowing what projects qualify. So like I said, it's showing to HMRC that journey was technically difficult. Well, obviously they're going to want to know all about that. What were these technical challenges, and what you did to try and resolve these problems. So that's the information we want. We don't want to be giving them what ends up looking like a marketing leaflet talking about the end product and how great it is. That is not what HMRC wants. So it's important to get that right. And also it's important to use the right terminology that HMRC use, so that it makes it an easier job for HMRC to understand that your project does qualify. So a little bit about the deadlines here. Companies are against the clock to submit an R&D tax credit claim. Okay, so you do have a time limit on your claims, and that time limit is 2 years from the end of the accounting period where the R&D took place in order to submit the claim. After this date, the claim is lost. So any financial benefits that were owed to your company is gone. So what I would say here is that companies that are new to R&D tax credits and have more than one accounting period that's already been completed, what you can do is claim for 2 years in one go. Because of this 2-year rule, you can actually submit an R&D tax credit claim that covers the previous year plus the year before. And the benefit of that is obviously you would be claiming 2 in 1, so you'd obviously be getting a higher cash benefit, but also the workload in terms of preparing that is a little bit less. So you can justify the 2 periods with one submission instead of having to do 2 separate submissions. So it's a good idea if you've got that to do the 2 years in one, do the 2 years together. So a little bit about some of the benefits that we've managed to get some companies over the last couple of months. So obviously the benefits of an R&D tax credit claim can be vital in the current climate we all find ourselves in. And here are some of the successful claims we've made, highlighting the scale of what's available really. So one being an electrical engineering company that we did an R&D tax credit claim for, managed to get them £110,000. And a software company developing new software, we managed to get them £85,000. Now I've brought those 2 up as an example, or highlighting those, because essentially those are companies that the electrical engineering company develops components that go into other people's products essentially. And the software company develops software that gets bespoke or sold to a single company. So the reason I brought those up is it's important essentially to identify where the R&D sits within a certain relationship. So in this instance, take for example the electrical engineering company developing components. If they are developing a component that goes into someone else's new product, who's entitled to make the R&D tax credit claim here? So when you have this multitude of companies involved in a project like this, it is vitally important to understand which company makes the R&D tax credit claim and which one doesn't. Because for the same project, you can never have 2 companies claiming the same expenditure. It's not allowed. So in this instance, we were able to identify that the R&D sat with the component company, and therefore they are entitled to make the claim and entitled to make it at the fullest rates possible. And also the same case with the software company. They were the ones who are entitled to make the R&D tax credit claim, not the company commissioning them to do the work. So that's an important point here. Obviously, if you got that wrong, you could either be claiming at too low of a rate, so you're not claiming it at the highest rates possible. You're claiming it as if it's a subcontracted in project, so you'd get a lot less. Or alternatively, you're not claiming at all, so the company misses out. So it's important to be able to understand where the R&D sits in that relationship. Another couple of examples here that we've done, construction companies managed to get £70,000, a manufacturing company 40, another bottom there, a fintech startup that got £16,000. Now that might not seem a lot of money for the R&D tax credit claim, but actually that company in the position as a startup, that was really, really helpful for that business, being able to get that money in. So I put a little bit about us as a company, just to cover off what we can offer. So we're a regulated consultancy with a chartered status. So not many R&D companies can actually say that. This is not a regulated industry area, but we are a regulated company. We do specialize solely in R&D tax credits. Obviously that means that we essentially see a lot more than average accountancy practice would, and we're able to cover a lot more sectors and got that depth of experience. 100% success record, like I mentioned earlier, we don't tie anyone in as well, which is quite unheard of as well. And our fees are contingent, so anyone does an R&D tax credit claim. If it wasn't accepted for one reason or another, you're not left out of pocket because there would be no fee charged for that. So yeah, just a little bit at the end, there's my contact details. Should anyone want to jot those down, feel free to obviously contact me at any time. If you're going to want to have a chat through your particular circumstances and your project to see if it qualifies, you can give us a call or drop me an email. Okay, and that's it from me. Obviously, if there's any couple of questions you want me to cover, I think Lisa from the AGP has been noting them down. So if there's any questions, I'll try and cover them now. Lisa, are you there?
Yeah, Matthew, thanks for that. We've got, I don't know if you can see the chat facility. Can you on your side screen? You've got a couple of
Let me
questions
try.
that come up in there.
I have a question when you're ready.
Let me see if I can find where this has gone.
There's only a couple on there. I can read them up there on there for you.
For some reason, my screen has gone funny. Bear with me.
Can I ask a question now? Or?
There we go. I think, there we go. I'm back. I'm up and running.
Okay. Yeah, John, do you want to go first and then we'll go through?
Yep, okay.
Well, I'm going to give Matthew a chance as well then to read the others too.
Okay, thank you. Matthew, we've worked, we found some sort of issues that needed improvement, and we've then decided on what we think is the answer. But we've had to go to, for instance, Welsh Water. We gave them some advice on a certain issue and told them what we thought was required, and they eventually did that. Would the work we did on that qualify, because it was them that then had to do the improvement to their system?
So it would depend on the relationship you had with them. So I'm assuming then that you provided consultancy services to them. Whether or not you can claim R&D tax credits would boil down to essentially whether or not you were, one, doing a qualifying project, so you can demonstrate to HMRC that it was technically difficult to develop your solutions or your advice. And two, it's then determining whether or not you were acting as a subcontractor to their project or whether it's your own project.
Well, it was really a part of our own project. We had a lot of difficulties in a certain area, and their agreement was probably conditional on it being successful, because you can't force them to do certain things. So we advised what we required, and they then eventually did it. And it did then make our life a lot easier and helped the particular process that we've been working on then worked, if you see what I mean.
Okay, so it was part of a bigger project then. So
yeah.
And as part of that, you needed to speak to Welsh Water and get them to implement something their end. Is that right?
Yes.
Okay. So obviously that part of it is that advice you gave to Welsh Water would probably be part of your bigger R&D project with
of course, yeah,
larger project. So
yeah,
as part of that, obviously the cost side of things, there were only 5 categories of expenditure. So how that's captured then would be within your time spent on the project in terms of figuring out these solutions and providing that advice, which then would be reflected in how much wage cost for yourself and your staff gets allocated to the project. But to be honest with you, to be conclusive, I'd need to understand what your project is and what you were doing, and then figure out what's Welsh Water got to do with it, and understanding their role in that to be able to give you a more definitive answer. But on the face of it, I think yeah, you got no issue there.
Yep, that's great. I've got a similar situation as well with oh, sorry.
Okay.
Good with this. 1 second, as this guy keeps ringing me. Yeah, we've got another one. They manufacture a particular product, and the particular product had some issues where we couldn't fit it into a certain area that we had to put it in. So we came up with a solution for them. They then put that onto their product, and it was then suitable for us. So we spent a bit of time working out what they needed to do with their product, told them what they needed to do, then they did it, and then we had the product off them, which was suitable for our purposes.
Right, okay, so this is, as part of your project, you needed to source a product. In its current form, it would not work in whatever application you need to apply it to without some form of modifications to that component.
Yeah.
Is that right? So therefore, you then designed and developed the modifications, figured them out, and then essentially contracted them to supply the modified component.
Yeah, that's correct. Yeah.
Yeah. So that would be again mopped up in your R&D tax credit claim. So so that's fine. The other component manufacturer presumably would not be making an R&D tax credit claim on the basis of modifying that component. If you did the resolving of the scientific and technological uncertainties in that. But again, there'd be a lot to cover there to go into that, into a lot of detail to understand what the contractual relationship was between you, and why that was done, and to what extent they were involved, to what extent you were involved.
Okay, that's great. Thank you very much.
Okay. So I've got a couple of chat questions here, which I can cover off now. So I think one's from Vicky. Where would working with academia and university costs in an R&D expenditure fall? So if you've outsourced certain aspects of your R&D to the university, or whether or not you're using people supplied from that university, that would fall within either the externally provided worker category, or it would fall within the subcontracted R&D. So when you bring in universities into your project, you can still claim for what costs they've had. Whether or not they've done that for free, though, is another story. So if, for argument's sake, the university has supplied services to you at no cost, organisations such as CMET in the University of South Wales do that. Obviously, there's no cost to you, so there's nothing claimable in your R&D tax credit claim because you haven't spent anything. But if there is costs you're incurring with bringing in that university, that would normally be allowable cost within your R&D tax credit claim in one of those two categories. But it would obviously depend on understanding exactly what that cost is, and what it relates to, whether or not it can be claimable, but on the face of it, it should be claimable. So Gary Johnson has asked, shouldn't your accountant be doing this for you? Technically, yes, but to be honest with you, not many accountants do it. It's a specialist area, and a lot of them don't get involved. And if they don't have the experience as well, they don't normally spot the opportunities for their clients. So Limestone Grey as a company, we partner with quite a few accountants, mainly in South Wales. So we do the R&D for them, R&D tax credit claims for them. But there are some of your larger accountants may have the specialists in-house to be able to do that. But one thing I would state is that if your accountant, if you don't know whether your accountant is doing this for you, he's probably not. The reason being, it's not just down to the numbers. You need to be able to justify the R&D tax credit claim in terms of explaining to HMRC what the project is and why it qualifies. So that accountant would need your input for that. So they would need to speak to you and understand the project and all the details to be able to put the case together. So if they're not contacting you and asking you about this, then I would check to make sure that they are actually doing these claims for you, or just to ensure that you're not missing out. Vicky has asked, where would improving heritage skills with technological uplift fall to improve efficiency and health and safety on site? Improving heritage skills with technological uplift. To be honest with you, Vicky, I'm not sure what you mean by that. I'd need to probably have a chat with you a bit more there to understand what that technological uplift is in terms of what you're referring to. But in terms of whether you're saying that you're performing a service in order to improve people's skills, then potentially yes, because services is an area that qualifies for tax credits. It's then understanding what you mean by technological uplift on that. So I would probably leave that and say that let's have a chat so I can understand it in a little bit more detail what you're doing here. Gary Johnson has asked, in software, therefore, does that mean whoever earns the intellectual property is entitled to the claim? So it's a little bit more complicated than that. So IP ownership used to be probably the most fundamental aspect of this in determining where the R&D sits. But that was eliminated a couple of years ago now. And it is still used as an indicator, but it's not the conclusive evidence. So in order to understand where the R&D sits, now HMRC look at a range of factors. So IP ownership being one of them, but also the main one to know where the R&D sits is essentially which party is taking the economic risk in that transaction. That's the most important part. So where, for example, in the software case where a company is developing software on behalf of someone else, if they are acting as a subcontractor to them, then they can't normally claim R&D tax credits on that. It'll be the customer claiming. If they're not acting as a subcontractor and they're doing it as their own R&D, they can claim R&D tax credits. So the important factor is determining, are you acting as a subcontractor or are you not? So HMRC look at 4 key areas for that. The first one being who takes the economic risk. So if that company developing that software isn't really assuming the economic risk on this, or in terms of overruns and failures, then that's indicative that they're acting as a subcontractor and it's not their R&D. If, however, they've perhaps agreed a fixed cost for this, a fixed price for the software, that obviously means any overruns or failures are met by that company, and that's indicative they are not acting as a subcontractor, and therefore it is their R&D. Other areas they look at, I touched on IP ownership. What HMRC are looking at there is essentially who owns it upon its creation. So the second the IP is created, is it assigned over to the customer, so it's theirs upon creation, or is it assigned at the end of the project for a fee? So if it's assigned upon its creation, that is indicative you're acting as a subcontractor in their project. If it's passed over to them at the end, either retained by you or passed over, sold to them at the end, then that's indicative that you could still be, it could still be your own R&D project. Another area is the level of deliverables that you are providing. So, for example, if you are doing the whole project yourself and bringing in subcontractors that contract directly to you in order to do that, so you're developing and providing the whole solution, that's indicative that it's your R&D. If alternatively you are one part of the whole, so you're one subcontractor working with many other subcontractors to provide part of the solution for the top company, then that's indicative that you're a subcontractor and therefore you should not be making the R&D tax credit claim. And the final, fourth one is the degree of autonomy you enjoy in the relationship. So for argument's sake, if you are micromanaged, if you will, overseen by the top company, then that is indicative you're a subcontractor and therefore it's not your R&D. If, however, you have a complete from them and you can build whatever it is using whatever methods you and whoever employees you want, then that is indicative is your R&D. So it's not a black and white answer. It's essentially you need to look at that relationship between you and the company above and understand whether you're acting as a subcontractor or not acting as a subcontractor. Is it your R&D or not your R&D? And it's looking at those 4 factors, the economic risk being the most important of those 4, in order to determine whether or not which party makes that R&D tax credit claim and which one doesn't. So hopefully that helps, but if you've got any follow-up questions, obviously feel free to contact me. Jeff Francis has wrote, what are the new changes to the program mentioned in the last budget? So the last budget, essentially, in terms of R&D tax credits, only affected one of the 2 schemes. So I haven't covered that in this slide because obviously there's only a limited amount of information that we can cover in this time. But essentially, there's 2 types of R&D tax credit claim. There's the SME claim, and then there's known as the Research and Development Expenditure Credit, RDEC claim, which is for large companies. So the changes affected that RDEC one, the RDEC scheme. And essentially what that did was take the relief up a little bit, make it a bit more generous. Originally it was 12% and they moved it to 13% of qualifying expenditure. So giving a little bit more. So normally that obviously being applied to large companies does not normally apply to SMEs. So we didn't really cover it here. But it can apply to SMEs when an SME organisation has received notifiable state aid for a specific project or grant that's notifiable state aid, such as an Innovate UK grant. In that case, they must make their claim under the RDEC scheme, not the SME scheme. So that's where they would be able to be impacted by this change in the last budget. There was also another change which was announced, not in the last budget, but before that, which many of you may have heard, and that was the restriction on the payable tax credit for loss-making SMEs. So like I said earlier, a loss-making SME who's not paying any corporation tax can still benefit from R&D tax credits by taxing HMRC. So essentially you're taxing them and getting money from them. So recently, or well, probably a year ago now, they announced that for loss-making companies, that was going to be restricted, the amount you could get back through that to 3 times your company's PAYE and NI liability, which meant that obviously any SME company doing R&D using all subcontractors and no employees and was loss-making was caught with that and potentially not being able to claim back that payable tax credit at all if they've got no PAYE and NI liability. So that was due to come into effect from a counter period starting on or after 1st of April 2020. But in light of the current coronavirus situation, it's been delayed till the 1st of April 2021. So that's not going to impact you now, but it's something to be wary of. It only applies to a minority of companies. Like I said, it applies to SME companies who are loss-making and also who don't have many employees. So they don't have a PAYE or much of a PAYE NI liability. It's going to impact them. And I think that's it on the questions. If anyone else has got anything they want to ask. Oh, sorry, one's just come through. Chris Davis has asked, we are pulling special project teams together to create new services. These aren't always created from scratch, but often consist of applying existing products and services in new ways. Would the resulting service process be eligible for a claim? Yes, it would. So I touched on it earlier. In terms of projects, you don't have to be creating something new. You don't have to be reinventing the wheel. So definitely that is something that can qualify, provided you can be able to demonstrate to HMRC the technical difficulties associated with that work, which I'm sure you would be able to do. So there's a subset of categories which I haven't touched on in this, which is known as essentially is known as systems uncertainty, and that's where your project essentially involves combining off-the-shelf solutions that on their own are quite well understood, but you're looking to combine them in a new or novel way in order to achieve a certain outcome, and you don't know how they should be combined and in what order, or whether it's even possible to combine them to achieve that outcome. So that in itself can still qualify for R&D tax credit. So you're actually using off-the-shelf solutions, but if you can show that you're combining them together in a novel or new way, where it's uncertain that you're going to achieve the outcome you're aiming for, that too can qualify for R&D tax credits. So yeah, I think that's all the questions now. So if anyone wants to ask me anything, please feel free to contact me outside of this as well. I did put my contact details up on there, but just go to limestonegray.com and just send us a message on there and we'll be able to pick it up.
Fabulous. Thank you, Matthew.
Great.
I think we've had a few thank you very much is on the sides there. So obviously covered a lot of detail there. So thanks for taking the time to give that information out there. And as said, you've given your details if anybody, and I guess they're welcome to contact you following the webinar as well if they've got any questions that they think of. Is that right?
Yes.
I don't want to give your time up without you knowing about it.
Yeah, no, that's fine. Anyone wants to chat. what I didn't mention is any conversations we have in terms of our talking to companies about their R&D is all totally confidential and completely free as well. So if you want to discuss your particular situation with us to see whether or not you can take this forward, then we're happy to do that and see if there's a potential claim to be made.
Fabulous. Vicky, there's just in a question pop up there with the slides. Yeah, no problem. As soon as I get your signed, your signature back over to us, I can get those slides out to you there as well. So that's fine there. So thanks everybody for joining us this morning. Thank you to Matthew for presenting, and hopefully you all have a good day and enjoy the bank holiday weekend wherever you're going, or not going if you're in Wales.
Thanks everyone.
Thanks. Bye. Bye. Bye.